Hi, everybody. Thank you for that glowing introduction. Um, I'm gonna share a PowerPoint presentation. At some point, Justin's gonna take over about halfway through. We're gonna start with just like some baseline fundamentals, and then we'll get into some specifics around student loans and overall planning techniques that we use. So my it's disabled for me to share. So if someone, I'm not sure if you guys can disable that. Whoever's in charge on your end.
Okay, you should be okay.
All right, here we go. Okay, beautiful. 1 second. Here we go. We'll share that, and I think that should pop up. You guys see a PowerPoint? Is that?
Yes, we do.
Okay. I haven't done this in Zoom Life, so let's see if I can figure out how to do this. Okay, here we go. So about us. So just to kind of give you an idea of who we are, the type of clientele we have, who we service. Justin and I work hand in hand with our clients from the institutional level down to the individual level. We both have a relationship with a firm called Intimet Financial Services, where we do student loan planning, financial planning for medical institutions, residents, nurses. We have a relationship with some of the other Jewish Orthodox organizations in this field, and we thought we can bring the same type of service we have available to them to the Orthodox Jewish nurses, because I think there's a lot of financial information that can be helpful and that is missing as well, that can provide some clarity to, especially in today's times, as to what's going on. So I mean, we have between us, I think, over 60,000 clients across the country, ranging from obviously nurses, physicians, practice owners, hospitals, institutions that teach medicine, and so on and so forth. And we try to listen to our clients, listen to their goals, needs, and make sure that those are being addressed. We have relationships with JOMA as well, which is another Orthodox Women's Medical Association. We have an immense amount of respect for people who go out into the field of medicine against all odds, take care of their community, their family, and obviously helping people in the most important ways possible while making a healthy living for their family is just something that I think is admirable and respectful. And given today's environment of what we're all going through, even more, the more we can give back in these times is something we're trying to do. And we've seen, unfortunately, that our planning has come to fruition a lot sooner for some of our clients than we expected due to COVID. So, it's just challenging all around, but hopefully with a guided hand, we can get through some of these challenges together. These are the type of services we provide. Not everything is applicable to everybody on this call, but we do baseline financial planning, which include from student loans to investment management, insurance products. Budgeting while in school can be a very important topic. Making sure you're taking out the right amount of debt, not taking on too much debt. Student loan planning, which Justin will go into in great detail shortly. Disability and life insurance, we do that both on the institutional level for some of our bigger institutional clients as well as individually. Business services, this if you're going to go into business as a nurse, let's say you going into business as a potentially an owner of an urgent care center, or you have an MP who's doing some work under the license of a physician. So we do things like partnership agreements, reviewing for our clients, making sure that the agreements have strategies for them to get out of the agreement. There's a somewhat of an in and out type of conversation, buy-sell agreements inside those partnership agreements. Making sure that our clients are protected in any agreements they go into, and that they get the best possible outcome for themselves. Practice valuations, again, that doesn't necessarily apply to nurses, but it does apply to some people that we talk about in investment and retirement planning. Obviously, everybody works. You want to make sure that you have the money put away to live out your life as you so choose. And that's the line of services we provide. We have a suite of services inside of each one of these kind of headlines that can be individually tailored to anyone on this phone call. As nurses, especially if you're the primary breadwinner of your household, you know, one of the most important things that you may not realize, your biggest asset is your income. People think their biggest asset is their house or their savings account. The truth is, it's your ability to earn an income. As a nurse, you go to school for a number of years to become a nurse, which means you delay your income for a couple of years. If you're taking on debt, you're delaying your income even further by having to repay that debt, just so you earn a higher income potentially than not being a nurse. So, if you kind of calculate out what your income potential is and what you actually make over your lifetime, it is significant. And, God forbid a disability, even a minor one in the field of medicine, can derail a career from where it is today, completely derail it. Even a partial disability like a back issue or a neck or shoulder issue can be very problematic. You guys are on your feet a lot, long hours. So it's really, really important that you have that protected and make sure that if God forbid something happens, your family has the resources necessary to continue their lifestyle. The same, I always ask when we do like live presentations, and this was supposed to be a live presentation, and sadly it's not. I always ask, as a show of hands, who can show me who here has life insurance. And in a room, I'll usually get 30-40% of the room will pick up their hand. And then I'll ask jokingly, how many people here have been sick or injured before and couldn't work? And most of the room will pick up the hand. And I go, okay, how many people are here have been dead before? And the answer is always zero. But for some reason, everyone has life insurance and no one has their own disability insurance. And statistically speaking, the likelihood that you'll get disabled is significantly higher than passing away during your working years. For some reason, that risk is something that advisors don't talk about and are not addressing, but it's really a primary concern, at least in our mind, when we talk to clients. We'll review any insurances you have. We'll review any disability insurances that are available for you to purchase in the open marketplace. We have special discounts available, depending on what hospitals you work in, et cetera. And obviously life insurance, again, same thing applies. We can review whatever you have, make sure that you have the proper coverage in place to take care of your family if something were to happen. Just kind of some baseline, going back to insurance and retirement planning just for a second. We try to get our clients to think about taxes a little bit when we do this planning, understanding the implications of income, of earned income, and how that's taxed at the highest level of taxes versus some other taxes other sources of income can be taxed differently. And we're always talking about trying to get some other sources of income in play that can be taxed differently throughout your kind of life and career financially. The same thing also, we have a system that we can use for a lot of our clients that teaches people how to save before they spend, as opposed to spend and then save, which is what most people commonly do. Most people commonly earn money, goes into their checking account, they spend it on their bills, and then whatever's left over at the end of the year, then maybe they save for some sort of goal. We try to flip that around where the money goes into a savings account first. You save first and then spend from and then you have like kind of sub accounts that are for your spending. And then if you want to dip in to spend something extra that's not normally allocated, you're taking out of savings, which hurts a lot more. So we kind of teach people to change a little bit how they think about their income, change a little bit how they think about savings, make sure that you can save a little bit more. Living a frum lifestyle can get very, very expensive between weddings, bar mitzvahs, kosher food, Yom Tovim, all this stuff can start adding up fairly quickly. I have 4 little kids of my own. Yeshiva tuition. I live in the 5 towns. It's costing me before I go on a vacation, it costs me close to $200,000 a year just to break even. So I understand how expensive life can get very, very quickly, and making sure that we change the way we think about our money, that we have something for the future. Because 2 things are for sure: none of us are getting out of here alive. We're all going to have to pay taxes. And at some point, we're going to need some money to survive. So all that stuff is true, and we want to make sure that if you work with us, that all that stuff is being addressed, and obviously in the best type of time frame possible, and make sure that whatever insurances you're purchasing makes sense in that and are affordable, et cetera. And again, a lot of people on this call are going to be working for hospitals, and a lot of the stuff is provided to you by your employer. We can review all that with you, making sure that you're hitting all the nails on the head as much as possible, using whatever is provided to you by your employer to the best of your ability as well. Um, and then 1 second, Justin, sorry, I went into your side. Hold on. So I'm going to hand over the call to Justin. He's going to go through some of the student loans stuff. And then we'll circle back towards the end about financial planning concepts. We'll leave it open for questions at the end, or if anyone has any questions throughout, please, in the chat box, ask some questions. But that's kind of like an introduction to who we are, what we do. We're going to start with student loan planning. Justin's going to go into that. I think that's kind of the basics for a lot of people on this call. If you have student debt, it's obviously a primary concern financially to you. So getting a good handle on that will be the building blocks before we start talking about planning for the future. Obviously, insurance is always important, even while you're paying off student debt. But as far as planning for the future, and student debt's a big deal. So Justin, if you want to kind of pick up the screen share from here, and I will mute myself for the rest till you're done with that. Okay.
All right, sounds good. Hopefully everyone can hear me okay. I'm pretty sure I'll get a message if you can't. So thank you again for having me here. When you talk about loan repayment for nursing, nursing is unique in the fact that a lot of nurses, depending on the training that they receive, they're going to have a combination of loan types. Typically a combination of federal loans, private loans, institutional loans, and even things such as Perkins loans and nursing loans. And so when you look at that mix of loans and that structure of each one, things can get complicated pretty quickly. And when I would deal with my students at OHSU, and as I've dealt with clients after I left, it's always important to take a look at, okay, I know I have these loans, I know I have to pay them back, but which ones do I have to pay back? Which ones can be forgiven? Which ones can be discharged? And exactly how do I get the best handle on everything overall? And when you're reviewing a scenario, especially for nursing, it's always important to take essentially an itinerary, create a line item of everything that is out there, and trying to determine what are the repayment options for each. Because we all know the basics of a loan. I mean, the basics of a loan are pretty simple. You have your principal, what did you borrow? You have the time frame to pay it off. You have your interest rate, and that's going to be your payment. And we always hear that, with debts, you want to pay it off as quickly as possible. And people typically, they look for the lowest interest rate, refinance, and call it good. Well, in your typical math sense, that will always be correct. A 1% loan is going to be cheaper than a 5% loan. I mean, we can all do that math. However, when you look at nursing and repayment from nurses, some of those basics that we learn kind of go flying out the window. And the reason why is that nurses have specific repayment programs that are available to them that are not typically available to everybody else. So with nursing, you look at primarily the 4 different types of loans that I see coming through my door. You have your federal direct loans, which are the loans that are eligible for things such as public service loan forgiveness, pay as you earn, repay, all the different income-driven repayment plans. Then you have federal nursing loans, which are awarded by an institution. These are loans you can only get for training in nursing. Either you're FNP, DNP, RN, maybe it's accelerated or what they call an ACT-BAC program, Accelerated Bachelor's of Nursing program. You can get the nursing loans. You can have Perkins loans, which those loans were discontinued, but people still have them. And then you have the private loans, or I'll put private loans in with institutional loans. Now, in terms of repayment opportunities, you have a lot more opportunities with the federal loans than you ever will with the private loans. And we'll start with the federal. Federal loans are typically broken up into 2 different types of loans. And it's really important, I'll show you where to get this information, to determine what type of loans you actually have. Because you might have a federal loan, but is it a federal direct loan or is it a federal FFEL loan? The way that you will tell is when you pull up your report, it will let you know direct loan, FFEL loan. So the direct loans are the loans you hear about when you talk about things like public service loan forgiveness. And just so you know that that program is still alive. That's the one where you work for a qualifying employer for 10 years, make 120 payments, and your loans are forgiven tax-free. That's for the federal direct loans. When you hear these stories about people getting denied forgiveness for their loans, it's typically because they had the wrong type of loans, which are the FFEL loans, which are not eligible for forgiveness. And so that's typically where you get like the first set of confusion. You hear about, oh, here's all these great opportunities that people have. Why can't I do that? Well, do you know what type of loans you have? And some people will come to me and say, hey, I have my printout from Nelnet, I have my printout from Navient or Great Lakes or whomever. And those printouts, while important, they don't typically tell you all the details. The next type of loans that are out there are the nursing loans. Now, nursing loans are a federal type of loan. They're a federal loan. They're money that's given to a school from the federal government that the school can then lend out to the student, and that the student then pays back to the school through a third party, such as Heartland ECSI or AES or ACS, all these little acronyms that run around there that they literally are just debt collectors for schools. Nursing loans can be consolidated in with federal direct loans to make a direct consolidation loan. So a nursing loan can be forgiven if it is part of a consolidation. So that's something you can look at, something that I'll look at when I'm talking to clients saying, okay, well, do you have direct loans? Yes or no? Do you have nursing loans? Yes or no? Okay, then the next one is, do you have Perkins loans? Now, Perkins loans are considered free money for nursing. That's because Perkins loans get discharged for people who work full-time in patient care as a nurse and in, well, honestly, as a nurse, PA, dietitian, essentially allied health positions. And this is something that I always go to first, especially when I'm talking to a nursing client. I look right at them and say, all right, do you know what type of loans you have? And do you know if you have Perkins loans or not? If they say no, then it's like, okay, well, let's look at your reports and make sure. If they say yes, the first thing I ask them is, are you filling out the paperwork to have your loans discharged? And this is where I go back to that talk, what I said earlier about the idea of low interest rates starts going out the window, especially with nursing. That's simply because when you look at it here, a Perkins loan is a 5% loan. It works somewhat like a nursing loan. It's money the federal government gave to the school that the school lent out to the nurses. Then the nurse will pay back, or the student will pay back the school by using a third-party intermediary, unless that student is working in a field that allows them to have their loans discharged over a 5-year period of time. Before I started at OHSU, the number of students that knew about the discharge was extremely low, because what do schools usually do when they send you out the door? Here's your diploma, congratulations, go get a job, pass your boards. Oh, pass your boards, get a job, pay us back. A lot of people then would go out and they would either consolidate their loans right away, because that's usually what the financial aid office tells every student to do. Consolidate your loans, just do it. And then they'll tell you, okay, well, if you haven't consolidated, then maybe I'll refinance with like SoFi or EverVest or any of these commercials, any of these groups I see the commercials about almost every day now, asking you like, hey, wouldn't you rather have a 1% loan than a 5% loan? Well, Perkins is a 5% loan, and you would not be mathematically wrong to say, hey, why do I have this 5% loan when I can get a 1% loan? And I'll rather pay back on 1%. And again, mathematically, that's not incorrect unless you're a nurse. Because if you're a nurse, FNP, DNP, psych, doesn't matter. Are you working in nursing in direct patient care? If you are, then you go about the process of getting your loans discharged over a 5-year period of time. Now, if you're sitting there thinking, okay, well, I've been paying on my Perkins loans. No one's ever told me about this discharge thing. Oh my goodness, what am I doing that's wrong? Well, quite honestly, you can retroactively go back and say, hey, school, send me my deferment cancellation request. At OHSU, you would graduate. If you're working full-time as a nurse, I'll tell my students that would come back to me as alumni and say, all right, here's your deferment request. We'll fill this out. You won't have to make any payments on your loans. And then a year later, you ask them to start discharging your debt. And after 5 years of working full time, your loans are gone, tax-free, just by doing your job. So this comes back to the question of 1% versus 5%. Okay, of course, 1%. All right, free or 1%. And not just free, but no payments, no interest, and gone. So I hit on Perkins hard, even though it's a discontinued program. It stopped in 2018. It hasn't been 5 years since 2018, last time I checked. There are still people out there who have Perkins loans that I run into that have been paying on them as a normal loan. Now, unfortunately, if you had consolidated these loans into your federal loans, or if you had refinanced them, it's too late. You can't unwind that. But if you're sitting there and you have Perkins loans, now maybe some of you already knew this, but for those of you who did not, something to always look at, because that's that free money that's just sitting there saying, hey, you don't need to pay us back. Now, when you're trying to find your information, this is where you go. This is where I tell all my clients to start. I want to see your report of all your federal loans. Studentaid.gov, one-stop shop. And just as a precursor to 2021, this is recorded, so hopefully somebody will listen to it a little bit later. All of the servicers have been fired by the federal government. Fed Loan Servicing, Great Lakes, Navient, Nelnet, Mohila, Ed Financial, your federal servicer, all of them were fired this year, and they will cease to be servicers by March of 2022. So if you're sitting there going, okay, I have a servicer, they're gone. Oh, there's a question that just popped up. Not sure if that's for me. Oh yes, please ask questions. Thank you for putting that out there, Jacob. You can log into this place and I'll show you everything. But again, going back to the servicers, they're trying to go to a 2-servicer system. They're trying to reduce the amount of misinformation that is out there because there is plenty of it. I give a 2-hour talk just simply on repayment. And a lot of that time is spent pretty much getting rid of all these myths and misconception about repayment. But the best way to starting, go here. It'll tell you everything you have. If you have a Perkins loan, it will show up here. Direct loan, show up here. FFEL loan, it will show up here. Nursing loans and institutional loans, that will not show up on this report. Not yet. They're working on that. They're trying to get everything on it. But for right now, if you ever borrowed anything federal, this will tell you all your details. To get more information, you would go to your annual credit report. So this is the one that it doesn't give you a score, but it'll show you everything underneath your social security number that has been reported. And you can use it for free. It will pull your information from any one of the 3 different credit reporting agencies. And it will allow you to at least see everything that's out there. And the best thing you need are actually one of the more important things that you need, not just when you're counting somebody, you want all those details. You know, you don't ever want to sit there and say, okay, here's your repayment plan, but wait, oh, I forgot to say this. Another place you can go, and I tell people to do this as well, is go back to your financial aid office. They can pull almost everything about you. It is amazing the amount of detail they actually have in their databases. Now, I didn't work in financial aid when I was at OHSU. I actually worked in student and academic affairs. But I would go to the financial aid office a lot when trying to develop a plan for a student. I need to know everything they have going on because sometimes the students didn't know what they had going on. And also, when you're trying to put together your schedule, it's all about, again, loan payment. Is it eligible for discharge? Is it eligible for forgiveness? Are you trying to use HRSA loan repayment with it? Are you trying to use NHSC? Are you trying to use a primary care repayment plan that are out there? There's all these very unique service-based repayment opportunities that are out there in nursing that quite honestly are an hour-long talk in and of themselves. Now, probably should have done this beforehand, so it's my fault for putting the slides in the wrong order here. I'm sorry. When you talk about 2 things, there's the consolidation and refinancing. Consolidation is when you take your federal loans and you slam them together. So let's say you're sitting there and you have 10 different federal loans and you want to make it look neater by only having 1 loan. That's consolidation. It does nothing for you mathematically. It's not a be-all end-all to management of loans. In fact, I am not a fan of consolidation because they raise your interest rate and they erase your prior loan history, I strongly advise people against consolidation. And then there's refinancing. Refinancing is when you go to a private entity and you say, hey, SoFi, I want to pay you back at 1% because I don't want to pay back the government at 6%. Again, this is where you go if you're trying to reduce your interest exposure. Now, if you had consolidated, and because of the CARES Act and the executive actions afterwards, you have a 0% loan right now. All loans are 0% until January 1st, at which point the interest rate kicks back in. We'll see what they do with future stimulus, but right now I don't expect anything to be done stimulus-wise for loan borrowers until February or March, quite honestly. If you had refinanced, then private loans are not affected at all by anything that's going on with regards to COVID relief. Private loans are in repayment, they're earning interest, you still have to make your payments. It's one of those things of you have taken away the government protections for a lower interest rate. Now, again, there's nothing wrong with a refinance, it just has to be the right circumstances. And people typically refinance because they're trying to either get out of a Parent Plus loan, or they're trying to get out of a bad institutional loan. I've seen some from like UMass where they're 8% for institutional loan. That's what they give their students. So it can make sense again to refinance. Just as it can make sense to consolidate if you're trying to reduce the number of servicers, you're trying to manage repayment in that regard. Say that you have, Navient, Great Lakes, and Nelnet, and you want to make one payment to one company, well, you can do it that way. You might also have some of the older loans that are not eligible for public service loan forgiveness, and you can consolidate to make them eligible. So again, when you're looking at loans and repayments, with regards to nursing, it is incredibly important to actually understand all of the different types that you have available to you, and then how all those types of loans are affected by your job, where you work, how you file your taxes. Everything has a direct impact on loan repayment. And it's incredibly important to know all those details, especially if you're trying to find the cheapest way to pay back that debt. So it's very easy if you want to keep things simple. Yes, you can just refinance. You can just go for one interest rate and call it good. But that might not actually be the cheapest way of doing it. The cheapest way might actually be the longest process. So that's it on those slides. Are there any questions at all before I turn it back over to Jacob? I'm looking at the chat feature right now.
If anybody wants to unmute themselves and ask questions, that'd be fantastic. You can type it in the chat box. Justin, thank you so much for, what time is it by you now?
It's not 9 o'clock, it's 6 o'clock here.
Okay, so I was going to say thank you for coming on late, but I forgot to.
Early evening for me. Thank you for coming late.
Yeah. Thank you so much to Owen, to the Orthodox Jewish Nurse Association for putting this together. We are available for questions. We are available for individual consultations. And as you can see from both Justin and I's conversation, that we really look at everything overall before we make any recommendations. We want to make sure that your financial situation works well with your current family, work life, income, all that stuff matters. Everything matters when it comes to planning correctly. We don't just sell product and walk away. We try to make sure that you're a client for life always. It's just something we really, we care about. And again, we're here for any questions. Our information.
Well, I have some questions for
Oh.
you, and the resounding sentiment from not only the chat box, but from the texts I'm receiving is that, man, people wish they knew about this before now, before they're in debt and misled. So I have a few questions. The first, I think, is for you, Mr. Ackerman, about whole term and whole versus term life insurance. what is the dollar amount? I know that you spoke about having disability insurance. Can you tell us a little bit more about what folks should do in different points or different stages in their career? I'm sure there's different advice you give for a newly minted nurse versus a more seasoned or tenured nurse.
Okay, so I'll address, those are multiple questions wrapped into one, so I'll try to unpack each one. Whole versus term is a very complex topic that is commonly misunderstood by A, the people who sell it, and B, the consumers more so than the people who sell it, because if the person who sells you doesn't understand what he's selling you, the likelihood that you'll be confused is, 10 times more likely. So whole versus term is, you do any research online, you'll see tons and tons of information about that, but it's essentially two different life insurance products. A term insurance is a temporary insurance product that lasts for a certain amount of years with its premium and death benefit kind of set. Significantly lower costs than whole life insurance or ULs or anything that kind of lasts long term. There is room in the marketplace for people who need long-term products, especially in the firm world. Most of us carry life insurance for our whole life because we have expenses our whole life. But whole life insurance or ULs or IULs or anything that kind of falls under the umbrella of something that has cash value where the premium dollars you pay don't go away, those are really primarily for hedges against inflation or hedges against taxes, or hedges against insurance cost over time going up. So if you're in the need for estate planning, which means that you have enough assets that's an issue. If you're in the need for insurance for the remainder of your life, you may want to look at something that's permanent because it will cost you less over time. If you have a large investment in 401ks or IRAs that are all pre-tax, you may want to hedge that taxes. You may think taxes are going up in the future. You may want to hedge that by having something that is outside of the realm of tax collectors. So these are all conversations we do. There's no real one kind of arrow that answers that question. It's really dependent on your situation and what else you have going on financially. Typically speaking, to give a kind of like a baseline answer, if you're young and you're starting out and you don't have a ton of, free capital, you're going to be looking at term insurance. As you age and you typically have more money, then that may come into play where you may need something a little bit longer term. Then for disability insurance, again, it's also a challenging conversation because a lot of people here work in hospitals and you're going to get some baseline coverage from your institution, but you want a policy that you control, that is not controlled by your hospital, that gives you coverage that can be increased over time as your income goes up and has discounts associated to it and is well priced. Insurance is general a young man's game or a young girl's game. It's a game for young people. I always tell my clients the best time to buy insurance is the day before something happens. And since we have no idea when that is, and if somebody here on this call does, please come work for me. I could really use that help. But since, the idea is to try to get insurance cheap, effective, and something you kind of put away in the drawer that's there for when you need it. I don't know if that answers all the questions, but I'm trying.
That's great. Thank you. We have another question from the chat box. Are there any loan programs for nursing students going for their BSN that are very low income or on, I guess it's Social Security?
Okay. So when you're looking at low income, SSI, etc., you probably would qualify for the nursing loan. With the federal government, the options are typically you have your grants, your Pell Grant, you have your nursing loan, and then you're going to have whatever the direct loans or unsubsidized loans are. After that has been used up, then everything just goes back to institutional aid if they have any, or goes to private loans. The third-party resources are few and far between, unfortunately, for undergraduate, heck, even graduate nursing. You might find some that are societal loans. Sometimes the institution has a relationship with a third-party society that allows a scholarship But when it comes down to low income, it's going to be the Pell Grant. It's going to be the nursing loan, and trying to get as much out of that as you possibly can. I know at our institution, when I was at OHSU, it was, they would always have this extra pot of nursing money for nursing loan just to be safe. And the director of financial aid held on to that very closely. And you would have to make the argument to actually allow them to allocate some of those funds to you. There's also some scholarship programs through the Nurse Corps. The Nurse Corps scholarship is pretty good. It pays for, I believe, 85% of the the Nurse Corps scholarship is 100% of the cost of education. The only issue with that is that it's considered taxable income. So they give you that scholarship, but that scholarship costs you in taxes that you typically can't afford to pay. So I met with a lot of students that would take that scholarship. It would pay for their full cost of education, but then we literally had to write IOUs to the IRS when we did their tax returns, saying that, yeah, I know I owe money. I'll pay you back when I actually have a job. I'm a student right now. So unfortunately, I'm sorry I can't add more to that, but you really have to push on the Pell, the institutional assistance, and the nursing loans. Those nursing loans are still out there and very applicable.
Thank you. That's very helpful. Anyone else in the chat box or any other questions? You can raise your hand virtually. All right. Hearing none. I want to thank you both for your expertise and for taking the time to join OJNA this evening. I found it extremely helpful, and I wish I would have met you when I started my nursing journey. Many times, finance is not at top of mind when going into a health-related profession. So your expertise is extremely valuable and very much appreciated. We will conclude this session. I want to thank you both for joining us today.
My pleasure.
Thank you.
I wish you both a very good evening.
Thank you for your time, everybody. We look forward to helping whoever reaches out. All right. Thank you. Take care.
Thank you, everybody. Take care. Have a nice evening.